Hey, what's up, guys, and welcome back to the channel. Today, we're going to talk about how I structure my real estate business with LLCs, holding companies, and how I run them through for my taxes. And I'm going to share a little bit of tips and tricks of how I manage my real estate business and stick to the end because I promise you, you're going to learn something new today. And dude, let's just get into it. All right, guys. So let's start with the basics, right? So most people don't have an actual LLC. So the biggest thing for us is to let's make one, right? So let's talk about it. So the first one is do not do it yourself. And what does that mean? A lot of people will tell you to save the $200-300 and go file your LLC with your state government or do it online on the websites and it costs like 30-40 bucks. Totally get it. You can totally do it if it's your first LLC, but if you have aspirations of growing your business and growing an actual real estate business that is multi-layered, has multiple businesses, has partnerships, all this stuff, you're not going to be able to grow this the way that you want to grow it, or you're going to do it by yourself for a couple years, and then you're going to realize that you messed up, and you got to hire someone and pay a lot more money to get it fixed. Okay. So there's things like LegalZoom, right? Obviously, LegalZoom exists and all these other companies. I use LegalZoom personally for my first one, and I hated it. It cost me about the same amount of money than the company that I'm using now, and they don't teach you anything. They don't help you, give you advice for corporate structuring, etc. Right now, I use Prime Corp Services to build out all my LLCs, and we're actually gonna do a little deep dive on my business and how it's structured, and yeah, how I layer everything within my real estate business. So yeah, so I use Prime Corp Services. They're a professional company that does all these things for me. They also help with taxes as well. The second thing is do not name it something that has your name in it. Okay. Funny story is my first LLC that I ever made was U Properties LLC. As you can imagine, there's reasons why you would want to, create an LLC, right? The first one is anonymity, protection from people knowing who you are, who owns that entity. And surprisingly, I didn't think about that. So in Louisville, Kentucky, the people with the last name YU, that's in real estate is one, she's a realtor, and then two, it's me. So if someone's looking at these properties and who the owners is, if they see U Properties LLC, more than likely it's probably my property, right? So obviously everybody knows who the owner is. Everybody knows me. They'll call me, I'm liable for suing and all this stuff. They can find me who I was. And the biggest thing as well is when you make LLC, you need an address, right? My address on my LLC was my home of rec, was my primary residence. Okay. Get a get a commercial address. You can pay like $10 a month for a commercial address. Or you can be a baller and buy a UPS store and have your UPS store have the address, right? So you'll never see packages come through. But biggest thing is you want anonymity, right? You want protection. So you don't want to be found. I literally have my name in it and I literally had my address on it, right? So if people have known me for a while, I was sued for a fix and flip that I sold 2 years ago. And literally, they knew who I was, U Properties. I wasn't trying to hide anything and all this stuff. And long and behold, I get a knock on the door by a bailiff, getting served some papers, right? But that's just an example of why you need to protect yourself, right, from liability and to protect your privacy, right? So hopefully this all makes sense. Do not make your LLC your name. Make it super inconspicuous. I also would even recommend not doing a real estate one. So like for instance, like we just have, if you know me, Top Gap, right? Whatever, strategies, homes, stuff like that. Nobody really knows what it is unless you're playing video games, but no one knows that it's a real estate business. So after this, we're going to dive into my real estate structure in my business, how I save money, how I run my taxes through it. And I hope you guys learned something cool and something new. So let's dive into this, right? So imagine that you have a property in Kentucky and it is a rental. So it is a Kentucky asset. If you are a new person, you probably um, would probably own it by yourself, right? So let's say you're a beginner. This is what I did. So I bought it in my own name. That was a big mistake. And eventually, as you grow as an investor, if you know my story, so my first real estate property that I owned was owned by me. And then when I got a little smarter, I created an LLC called U Properties, right? So there's no anonymity. Everybody knows it's me. So, obviously we've talked about this in the previous segment. So why do you have an LLC? Well, the first thing is legal liability, right? So if I own the property, if I own that first property by myself and I get sued by someone, if I get sued by a tenant, if I'm found liable, if I'm the only person that owns that LLC, my personal assets could be at risk. So like my retirement account, my pension that I get from the military, whatever it is, that could be all at risk and it's not worth it for a property out in Louisville, Kentucky. I'm telling you right now. Buy a LLC, right? Create an LLC. So if this house is in Kentucky, I really recommend that you get a Kentucky LLC. So whatever state that your property's in, I would just get an LLC in that state to match. And then from there, we're going to go up from here. This LLC is not going to be owned by you. Okay. So some states require you to report who the owner is. I think Arizona is one of them. So let's use Arizona example. If I own an LLC in Arizona, I have to disclose the owner. So obviously, we've been talking so much about anonymity and all this stuff and privacy. You want this LLC to be owned by a holding company, which is also an LLC, right? So this is a holding company. It's also an LLC. Mine is specifically from Wyoming. Why Wyoming? Wyoming is more favorable towards business owners. They are big on privacy. If you're getting sued and you do everything the right way, like having your books in place, you're not mixing money and commingling all this stuff. It is super beneficial to have a Wyoming LLC because they will more likely to favor a business if you're in, some sort of dispute, and also it just has really great privacy. So as you start building your real estate portfolio, a lot of people will ask me, hey, Tim, do you recommend having a LLC per property? No, personally, I think that's dumb. But go talk to your CPA and all that stuff. You're going to have like a million LLCs, and depending on what states you are, like you California guys are paying like $900 a year to renew. That just isn't worth it to me. Okay. That's just not worth it to me. I really recommend that you bunch a bulk amount of houses in one. So like for me personally, I will probably, and this is a personal thing to your risk, it's a personal risk. So for me, I probably will own 10 properties max in LLC. We have an equity limit. So let's say like $1 to $2 million of equity. So once we start getting to that threshold of equity, we probably want to transfer it over into another LLC or begin a new LLC because, that's a lot of assets that we're not willing to risk, right? So each house in those LLCs have an insurance policy, right? So if something happens, house breaks or whatever, you have an insurance policy. To better protect yourself, if you're really scared, pay the $50 a month for an umbrella coverage, right? So you can get additional insurance on your business, on your LLC. So for me personally, I don't need a separate entity for every single house. I'll pack 10 of those in there and I'll get some umbrella insurance coverage over it. Cost me $50, right? And we're good to go. And I'm protected, I'm shielded, right? And remember, all these houses are multi-layered. So let's keep going down. So everyone knows that's following me. I have these 6 houses that we bought in Iowa. And this LLC is an Iowa LLC and it's owned by my holding company. So big thing about this LLC, right? And why I always stress that you should have a professional that runs all this stuff. So my holding company owns 30% of this Iowa LLC. Okay, so 30% of this Iowa LLC belongs to my holding company. As you start diving deeper to this business entity here, there's going to be a imaginary line, and this LLC is going to have 30% ownership with my two partners, Jake and Adam. Right? And this is not counting all the other LLCs that I have that has businesses, 10% ownership, 15% ownership, 50, 60, 70% ownership. This is all over the place. It becomes a giant 3D spider web, right? Imagine if you were that guy or girl that created your LLCs on the Kentucky government website, bro, your spreadsheet would be insane. Okay. You wouldn't be able to track your fees, your registries, all this stuff. It gets really complicated. And if you start creating stuff by yourself, it can get real dicey, my friends. You're gonna have to fix all these problems, right? So all this is my passive real estate or passive investment, passive money LLCs, right? So I have a holding company just for the passive income. Well, not yet. I'm actually about to structure this right now. So right now, that's all my passive stuff. So let's start talking about your LLCs in your active portfolio. So what is the difference between active and passive? So active, that's like flipping, wholesaling, stuff that requires you to actively work to get your money and is usually shorter term, right? Less than a year. So your passive income is going to get taxed differently. That's why I really recommend you separate these, because who here is watching right now that has one real estate LLC that does every single thing, right? You have long-term rentals, you have flips, you have wholesaling deals in there, you have all this mixed money in there. Who else has it? Trust me, I was that guy. Okay. Do not feel bad. But your tax guy will hate you. My CPA yelled at me every single day when I was filing my taxes because it is so complicated. And also, if you don't have things separated, I guarantee you, you're going to jack up your taxes and you're going to pay more in the long run because it's not clean, right? So, if you have an LLC that owns Airbnbs and you're actively managing it, is it active or passive, right? I think that's more of a question of perspective. If I have 10 Airbnbs in LLC, but a property management company is running those properties, is that passive, right? If a property management company is running these 10 properties, yes. If you're the person that's actively managing these properties, you're going in every day, flipping the beds, whatever, or you're managing the business, you would be on the active side of the house, right? So let's start diving in. So imagine, I don't have this yet, by the way, so I'm just telling you what I'm about to do. I'm about to start a holding company. This is my holding company, right? In Wyoming that I'm going to start. And this is going to be my active holding company. This LLC will have a flip LLC and also a wholesale LLC. Oh my gosh. I'm so sorry, guys. I cannot write for my life. So this is a wholesale. I'm going to teach you some pretty cool stuff with my business structure here, okay? So let's say I have a deal, I have a wholesale deal, and I'm supposed to make $8,000 if I wholesale it. But I kind of like this deal. I think I'm going to make $30,000, $40,000 on a fix and flip, right? So what if I sell a property to my flipping business and I get an $8,000 finder's fee or assignment if you want to be a real estate guy. But if you're a new person that's learning about real estate, an assignment in the wholesale space is a finder's fee, right? We find an off-market deal and then we sell it to an investor for a higher price and we get a fee for finding that deal. Some of you ask, or some of you may ask, why am I charging myself $8,000? Because we're going to use hard money or private money to buy this deal. So debt is tax-free, correct? So we're going to borrow this money and we're going to pay our wholesale company $8,000. That shows our wholesale business is generating income, makes us more bankable. And that $8,000 is free money that we're going to use to continue paying for marketing. So that $8,000 goes back into the machine, goes back into direct mail, paying our cold callers, all this stuff, and keeps the machine going. Now, when you flip the house, you're going to pay back the hard money loan, right? So you're going to pay back the hard money loan. Now, what if we didn't want to flip it and it would have been a great subject to seller finance, whatever, a great BRRRR opportunity. So it'd be a good long-term rental. We're going to sell this deal to one of our passive income LLCs. Same exact thing. And how do we pay back the hard money loan? When we refinance the deal or we use the cash flow from the private money lenders and pay them off, right? So that's little magician type stuff to help your wholesale business make money, but also you can keep the properties. It's a lot cleaner if you have these multiple LLCs that do this. But this is just a little example of what you can do with your wholesale flipping active side of the house. For all you people that are watching that are Gator lenders, private money lenders, all this fun stuff, you're going to not have a holding company, but you'll have an LLC that's owned by yourself. And why are you owning it by yourself? Well, because banks want to see you bankable, right? They don't want to lend money to someone that has a multi-layered business. They don't want to see, the smokes and mirrors. They just want to see you. Are you credible? Do you have good credit? You have good history? And then this LLC, you also don't want to commingle it with all your other properties just in case something bad happens. You want this LLC to be cash because you're either borrowing money from banks or you're just making money, which is a great thing. And then the second thing is if there was lawsuits and you were found liable for something weird, you wouldn't lose your properties. You would just be losing a ton of debt, right? Because you're borrowing credit cards, you're borrowing line of credits, and then you're going to loan that money out for your Gator transaction business and make a really great return, right? I'm not personally a lender, but this is just an example. This is just an idea for you guys if you guys were trying to do that business. But yeah, that's just not for me. So another reason why I like to hire professionals like Prime is because when you're creating new bank accounts with these new LLCs, it gets really complicated. They want to see the actual owner of these. Obviously, it's multi-layered. So what Prime does for you is they create a banking resolution document for you where you give to the bank and it shows who the owner is and it helps out all the stuff and makes the streamlined process, right? Second thing is when you're buying a house, I don't know if anyone's signed closing documents with all your different LLCs. It's like 1,000 documents you got to sign, right? So basically, Prime does all the paperwork like operating agreement, banking resolution documents, and operating agreements. All these documents, when you go close at a property, at a title company, they're going to ask for these documents, right? Same with the hard money lenders, all this stuff, they're going to ask for these documents. So literally, when your LLC gets created by them, they're going to send you an email. Make sure you and your partner sign the documents and you save it in a Google Drive or you save it, print it, whatever. Every time you go buy a house, they're going to ask for it. So you just send them the email and then you're going to be good to go, right? So if you want to learn more about this, obviously I'm not a CPA or anything like that. The link to their code is down below in my description. It is a completely free consultation. Enjoy it. You're going to learn a lot. Like I said, I promised when you guys stay to the end that I talk about something a little more advanced. So obviously this is a little more complicated. And I would definitely talk to a professional about this, but because everyone's situation will be different. Okay. My situation will be different from yours. My situation will be different from my parents, right? So all these different LLCs will funnel. So these are holding companies. Remember my passive holding company and my active holding company that I will create this month. All these are going to feed into a trust. Okay. I do a revocable living trust right now. I think I just want to make sure. But basically, the reason why I have this is because for tax purposes, it's a little more beneficial for me. You don't have to file a separate tax return for a revocable. We would do cash distributions if you do need to get paid on something, but also because all these entities are passing through into this entity, my taxes are a little more cleaner because I know how much money we're making. I know how much money we need to deduct. Like if you have everything falling into one, you know exactly what you need to do in order to save money on taxes, right? But obviously, this is a very basic overview. If you've enjoyed this video or if you learned something new, please hit the like button, hit the subscribe button, and hit the bell to get the notification when I post another video. Let me know what you want to know down the road, what type of topics you want to talk about, and I'd be happy to film some new content for you. And I'll see you guys in the next video.